Hey man, what's going on? So I'm doing this video this morning about what happens if you're, real estate wholesaler, okay, or investor, and you're wholesaling for your strategies, and you want to assign your to a C buyer a property, okay, and the C buyer actually is getting a traditional loan through like a bank or something like that, okay. What do you do? Okay, if I get people call me about this, like, what situation, how do I get around this, or what kind of pitfalls, and so that's what this video's for. Okay, first of all, it can be a lot more challenging to try and wholesale a property to a person who's getting a bank loan, a loan, and I'm not talking about hard money loan or private money. I'm talking about traditional bank loan with a credit union or Wells Fargo or something like that. Okay, follow me? So it's gonna be hard. So this is what you need to be looking out for. Okay, and here's the reality. Here's the challenge. I'm not saying you can't, but it could be harder. Okay, and so I'll provide the best solution into it. But I want you to understand something. This is what you need to be aware of. Okay, when a person gets a loan, so your C buyer, right? They want to get a loan. Their lender, okay, is through either credit union or the bank, whatever. They're gonna have requirements, okay? They're really regulated, and they have all these rules all the time, okay? And so one of the biggest, so what happens is, when they're getting ready to do the loan, they're gonna pull the title commitment, and they're gonna see in the chain of title, okay, how you are signing, 123 Main Street to, Fred Flintstone, the buyer, the C buyer, whatever, right? Follow me? Okay. So they may not like that. If they don't like that, then it blows up at closing. That's not what you want to do. Trust me, you don't want it blown up at closing. Okay. So you want to have a very frank conversation with your buyers, the C buyers, lender. Okay. And here's kind of how it works. Okay. Just kind of open up the curtains into how lending works. Okay. So what you got going on is you have your lender. Okay, they typically, they're not going to be holding this loan. Okay, they get loans, they service them, and then they sell them in an open market, whatever, regulated market, whatever it is. Okay, all right, and that's for a whole other video. Okay, so suffice to say, especially with government-backed loans like FDA, okay, I'm sorry, FDA, FHA, sorry, USDA, okay, or VA, okay. These loans, because they're backed by the government, they have what's called investor overlays on top of the loan. So what that means essentially is the bank is going to have criteria about what kind of loans they're going to give, that kind of thing. But since they know that these loans are backed by the government and that they're going to sell these loans to other investors, right? They have investor overlays, and those investor overlays change a lot, okay, all the time. And so they may have some sort of stipulation at the current time that does not allow somebody to assign the contract. Okay, so how do you know if that's the case or not? Well, you could study current loans, and I really encourage you to do that. I mean, part of being a real estate investor and being successful is get to know your market, get to know your niche. Who is actually buying your properties at the end of the day? If you're, let's say you're just going to do a wholesale deal. Well, your ABC, your C buyer is going to buy it. But what's he going to do with it? Is he going to do a buy and hold, or is he going to do a fix and flip? Well, then, okay, who is he selling it to? Fred and Betty and their 2 kids and a dog? Okay, what kind of loan is Fred and Betty getting on that kind of house? Does that make sense? Really get to know how this thing works. Okay, that would really help you. Okay, and how you do that is meet with lenders, talk to them, And if all you think, well, I'm a wholesaler, I don't do that. Well, then you're being foolish. You really are. You're being very narrow-minded and very foolish. You want to really engage in this business. And if you could understand how how you can be successful in real estate wholesaling, is understanding how everything works together. Okay, it's not just I'm wholesaling houses. Well, that's real cute. But why are you wholesaling houses? How does it work? Why do people buy product from you, right? That's because there's a whole huge, matrix of context and people moving properties around. Like in buying loans, selling loans, fixing out. All right, that's what real estate is. Okay, so you need to understand that. Okay, so all that to say, make sure you have a conversation with your lender, okay, or your C buyer's lender, if see if a wholesale deal will work. Okay, if it won't work, then this is a solution for you. Okay, this is the easiest way. It's just transactional funding. And transactional funding is you have an ABC transaction where you're going to be your B, right? And you actually will then fund the house, and you're going to fund the house because you're going to get a loan essentially. But it's called transactional funding. It's short term and it's going to be expensive based on points. Points is a percentage of the loan. It might be 3 points. If you have a $100,000 loan, 3 points, three grand, right? It's expensive, right? Say your profit's 10 grand. You know what I'm saying? Do the math, right? So, but that's how it works. Okay, so you essentially will take title. You'll close your lender with this transactional funding, even though you don't have any money. I know you're a wholesaler. They're gonna fund it, and you're gonna take title of the house. And as soon as that gets recorded, okay, then your C buyer, okay, is going to come in and buy the house. Okay, that's one way. Okay, now a couple of things of transactional funding. Transactional funding, you're not just going to find anybody who's going to fund you this house. Oh yeah, I'll fund. Can you fund me this house and I'll find a buyer for it? That's not how it works. No lender's going to do that. They're going to want to see executed purchase contract from your C buyer. They want to make sure that that they can buy. They're going to want to get a loan commitment, that kind of thing. They may even want to have a conversation with the C buyer's lender to make sure that they can fund, right? Because transactional funding guys are in and out like in a day or something, 24 hours. Okay. Typically, some guys are longer. Okay. One last thing though, in a transactional funding situation, you make sure you understand this about your buyer, your C buyer, because there might be an investor overlay that says you've got whoever the C buyer is buying the property from, be it you, the wholesaler, or Santa Claus, or whoever, okay, they may have a requirement that says that the seller, would be you, in your case, you're the seller now, since you get the transactional funding, has to be seasoned, meaning they have to have owned the property for at least 90 days. Well, is that going to work for transactional funding? You can't. So then, if so, then you got to figure that in your calculation. You got to find a transactional funder that could be for that seasoning period. Does that make sense? 90 days. It's probably be pretty expensive. Then you might think, is it worth it? Okay. The last option that might be the best to be really working with your buyer, C buyer, is you network with the local guys in your RIA club, right? And see if he can get some private lending. Okay. So you'll wholesale the property to your C buyer. The C buyer, then he takes ownership with his private money. Okay. And then you get your wholesale fee. You follow me? You're out the equation. And what he does, he holds down, he's on title. Yeah, he's got hard money and so forth. But at the end of seasoning period, 6 months, 30 days, 90 days, 6 months, whatever it is, then your C buyer can refinance out of the private money situation and get the property. So I hope that works. These are some creative strategies that you can always utilize. Remember, there's a way to do it legally and ethically in this business. Okay. So the takeaway is make sure you network, understand how loans work, and whatever kind of real estate wholesaling, you're doing, $600,000 homes, $200,000 homes, $50,000 homes, whatever it is. Okay. Get to know how the current, it's very dynamic, but currently how the loans work. So then you really can make good business decisions, right? And have connections with these guys, because they're going to make you a lot of money, and they see the value of what you're doing too. So I hope this helps. Godspeed. If you have any questions, you need help, you want some mentorship, whatever, let me know, and we'll do a free strategy session. Give me a call. Talk to you soon.